One of the main benefits of paying into a pension scheme is the tax relief you receive on the contributions you pay. The purpose of this presentation is to see whether you need to claim further tax relief and how you can do so. So when should you claim for further tax relief? If your contributions are deducted from your pay, which has already been taxed, either from a bank account or salary, this is known as a relief at source pension scheme, which can either be a workplace or a personal pension. If you make regular or lump sum contributions into the pension and are a higher or additional rate taxpayer, then you should claim higher or additional rate tax relief on your pension contributions, and I'll explain how you can do so shortly. If your pension contributions are deducted from your pre-tax salary, this is known as a net pay scheme. This means you are already receiving full tax relief on your contributions. This also applies if you are using salary sacrifice or bonus sacrifice. You cannot claim tax relief on employer contributions, and if you are a non or basic rate taxpayer, then you are already receiving full tax relief on your contributions. And why is this important? Tax relief can boost your pension contribution, and the larger your pension contribution, the larger your pension pot. As an example, if you wanted an £100 contribution to go into your pension, as a basic rate taxpayer you would need to pay £80, and the additional £20 will be topped up by the government as tax relief. If you are a higher rate taxpayer and you reclaim the higher rate tax relief, then the cost to you would be £60. And finally, if you're an additional rate taxpayer, the cost will be reduced further to £55. That's not the only benefit of paying into a pension scheme. The amount of tax that is payable on your earnings is determined by certain bands, starting at 0% and up to 45%. Paying into a pension scheme extends your basic rate tax band, which means less is liable to the higher rates of tax. And there are other benefits too, such as retaining part or all of your child benefit, which starts reducing based on your income above £50,000. Or your personal allowance, which begins disappearing when you earn over £100,000. And finally, if you are in the additional tax band, you are almost getting 2 for 1 on your pension contributions, as you can claim 45% tax relief. To claim for higher or additional rate tax relief, you will need to provide HMRC with evidence of your personal contributions. The best way to do this is to look at your annual pension statement from your pension provider. On the statement, it includes a summary of the contributions paid, including what you have paid in and the tax relief received from the government. As circled here on the example, the personal amount paid in is £1,249 and the tax relief is £312, making a total of £1,561. If you are submitting a self-assessment tax return, this is the figure you'll need to include in the Paying into a Registered Pension Scheme section, and it's box number 1. You can obtain this information by either registering for online access and getting this directly from your pension provider. Alternatively, if you are with Cartledge Morland, you can call or email us and we will be happy to provide you with the information. Once you have obtained a copy of your contributions, there are several ways you can contact HMRC. You can register online and submit a self-assessment tax return. Please remember the deadline date to file a return is the 31st of January. You can also write to HMRC and we can provide you with a template letter which is included within our guide. Alternatively, you can call HMRC and we've included their contact details on the slide. Once HMRC have agreed your claim, there are several ways you can get your money back. They will either reduce the tax you pay them, you can also obtain a tax rebate to your nominated bank account, or alternatively, they will improve your tax code, which means you will receive full tax relief through your pay, and this will continue in future years unless you tell them otherwise. It is important to make HMRC aware of any changes, to ensure you are getting the right amount of tax relief and you're not getting too much, which could lead to a future tax reclaim. Tax relief on contributions cannot exceed your taxable earnings in that year, or £3,600 if lower. Any tax relief claim you make must be made within 4 tax years. And if you wish to maximise the tax relief available, you can contribute up to £40,000 per year. This includes your contributions and contributions received from an employer or third party. Please be aware the allowance is lowered for those with high income. If you are not sure if this applies to you, then please contact us for further information. Just to recap on what we have covered, you are eligible to claim more tax relief if you are a higher rate or an additional rate taxpayer, and your contributions are deducted from your bank account or from your pay after tax. You can contact Cartledge Morland or your pension provider directly to provide you with your personal contributions. Once received, you will need to contact HMRC, which can be done online, by telephone or post. You will then be able to obtain further tax relief on your contributions. It is also important to make HMRC aware of any changes, as they will need to make adjustments. If you would like to receive our guide to claiming tax relief or have any questions, please do not hesitate to contact myself, Kirsty Leonard, or the team. Our contact details are provided on the slide. I hope you found the presentation helpful, and thank you for listening.